Everybody, welcome to the show. Looks like we've got channel members Craig, Frank, Arturo, Svenborn, Brian, Rob, and some other awesome subscribers like Diana, Larry, Francois, Karen, Arthur, Aki, Donald. Welcome. Juneteenth. Yeah. Welcome to the show. So the futures are moving quite got quite sparky there for a few minutes. I was watching for a market close day, kind of sparky, and I mean, look at that right there on the restarts. Yeah, pushing lower. Tomorrow's gonna be a big OPEX. Like pushing 5.9, almost $6 trillion in notional value. That's, you unwind the option to the dollar value of stock that it controls, and that's what we're talking about. Not actually $6 trillion in premiums, but that's a lot of control in the stock market. So this should be interesting. Today, I wanted to talk about crypto a bit, but looks like the S&P has some support right here, coming down into it. If we get below that, might go even deeper. Kind of see how this goes. I do expect it to stay kind of between 6,000 and 5,900 into OPEX. It's kind of the sweet spot to cause maximum pain, I do believe, somewhere right in this zone, like that. Probably hang out here through tomorrow. It's going for it. It's probably going to hang out in there. So that's what I expect. There's a bunch of calls sitting at 6,000, a bunch of puts sitting at 5,900. So right in between the goalposts, cause all those to go to zero and all these to go to zero. That's what we call maximum pain. That's the most, the market is very efficient at generally causing the most amount of people to lose the most amount of money possible. So maximum pain theory. Now it could do something else, but that's kind of the likely path forward there. So anyway, looking at other stuff. Usually we just talk about crypto, and I've done that, quite a bit. For those of you, I guess before I talk any trades or anything, all trading involves a substantial risk of loss, especially crypto. It's the most volatile, if you don't like volatility in the market, don't trade crypto. All right. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. Not a recommendation to be buying or selling anything in the crypto market or anywhere else in any of the stock markets. So, if you desire personal financial advice, hire and consult a financial advisor. It's not me. I'm not telling you what to do. Despite many of you like, well, when I buy something from you, you're advising me. That's not the way this works. You're buying premium access to me, but I'm not giving you advice. I'm just showing you what I'm doing most of the time. So Tether and Circle, these are stable coins right here. A lot of attention the last couple of days on this because the bill that's being passed by Congress. So right here we have this right there, and this bill encourages. I didn't do a AI deep dive thing. This bill encourages competition with credit cards essentially. So what I'm Skags, if you're here, was very up on this. Like this could kind of break free because there's a lot of good, bad, or ugly. If you're a merchant, you use credit cards, you pay a processing fee. That's usually rolled into the prices, but typically when I go to the grocery store, you don't see a different cash price, credit card price, right? So it's all rolled into the price of everything. And I don't think that stable coins are like, I don't think the prices are going to come back down that much just because we start using stable coins for purchases and stuff like that. It does, I mean, yeah, it sounds good in theory, but in practice, I just don't see that really happening. Now, investment opportunities, if you think about it, how do you make money off of something that's pegged to $1? Right? That's interesting when you really think about it. Now, these guys right here, Tether, they're not public, but they buy big chunks of Bitcoin to hedge against any kind of dollar risk. Now, these guys just recently went public, and their stock is absolutely crazy. And we can talk about that. We've seen it come up on the morning list several times. I'm on the 1 minute chart here, daily chart. So we've only had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of public. And it's gone from $68 to $200. Well, that was pretty, nice hype. Now we might stall out somewhere in this vicinity here. 220, 270. That'll be a big resistance zone. If we go even higher to 350, we could get some crazy numbers here. And that's just a projection off of this little 3-day or 4-day pattern here. This is just an extension right up in there. Something like that. Now, eventually, I do expect this to do a bigger correction. Probably at some point in the future, we're going to go below the IPO low right there. Just probably going to happen. Now, look at these. These are controlled by a company, Max Supply Unlimited, right? So it's inflationary, just like US dollars. Now, an interesting tidbit is this expands the money supply of US dollars, because these are pegged to US dollars, without having to print more US dollars. That's like a secondary inflationary force for US dollars. It's kind of interesting, this dynamic. We haven't really had this with a fiat currency before, where we have external. I mean, we kind of have it with other central banks where they will lend out money. They'll take in money and lend out US dollars that they don't actually have. They just mark it on account and try to resolve it later. But this is creating US dollars that can be used, and they don't have to actually collect US dollars. You just, collect them on account. So this is kind of an interesting bit with these stable coins right here. And you can always pop onto CoinMarketCap right here and dig in. They have all sorts of information, how to lock in your yield. And if you wanted to, another way you could make money on it besides buying Circle stock, you could obtain USDC and stake it on an exchange. Now, notably absent here, we don't see Coinbase, we don't see Crypto.com, we don't see most of the ones that are easily accessible if you live in the US. The APY, the interest rate, varies quite greatly from practically 0% all the way up to 15 is the highest I see on here. It's kind of interesting. And then Tether, we look at that one, roll down in here, a lot more. Tether's the bigger one. Between the two of them, they control 85% of the stablecoin market right now. This one, a few more places you could stake down, up to 16%, 100% right there at Bybit. Now, what's the advantage of staking? I mean, you take some risk, right? Like if something happened to Tether, it blew out. Like we did have a decoupling. I think it was 2 years back, where the price of Tether decoupled from the dollar, went on like a 20-cent diversion, and people that bought it made tons of money because it snapped right back up. That was when Silicon Valley Bank kind of blew out. It was like kind of an attack on crypto a little bit by closing some of those banks that were financing crypto projects. But in the end, now things are totally different. I mean, in the end, it's like now the winds have changed and we're trying to actually encourage stuff like this technology here. So completely different opportunity. And I don't have either of these staked down. Now, there's lots of cryptos. I mean, lots is kind of an understatement. There's 17.3 million cryptos right here. 17.34 million cryptos. What the heck do we use all those for? Look, 1.5 million created in the last 30 days. What? That's just crazy. Last 24 hours, 43,000 cryptos created in the last 24 hours. I mean, the barriers to entry to creating a crypto have become very low, and 99.9999% of them are going to go to absolute zero, have no value, no nothing, just be zero. Goose egg. Have no value, I mean, it's just, you can say scams. It's not even scams. And if you want to see where the cryptocurrencies are getting created, it's a lot of the explosion of them happened with Solana, the green right here. Solana enabled coins to be created, as a layer 2 type protocol, and made it very easy. And we see this explosion right there. There were lots of people kind of doing pump and dumps. Some of them made mainstream media news, and that's it's chilled out a little bit, but we're still seeing a large amount of those right there. Now, Base is another one that's kind of growing a little bit in the near term here. We're seeing Ethereum coins. Yeah, people just aren't rolling out in Ethereum anymore. We've seen a shrinking away from using Ethereum's network, and that's why we've seen their price on Ethereum declining quite greatly. So it's a threat. It's a threat to Ethereum, and it's partly, elitism. It's kind of my opinion on Ethereum. They kind of went elite. Like, we don't want miners, so they kicked out miners, and then we don't want people just using our coin for scams. And it's like you think you've got the money for the world, but then you kick out everybody that's actually using it for anything, and you're like, we only want the people that are serious about it. And then the price suffers greatly. We can see that right here. Oh, I have to turn off the drawing tool to be able to click. When we jump up and look at the bigger picture on Ethereum, we had peak Ethereum back here 4 years ago. We went proof of stake. They kicked out the miners and went proof of stake right here in September. We did make the lowest low. It looked like we were going to be bullish, but then we stopped dead cold right here under the prior high. We've done a move down and a retrace. This can lead to further decline. We've seen this exact same pattern across many, many, many other cryptos. many other cryptos. So this is kind of it's a little bit concerning to me that we came up right to the top of the danger zone, basically. This first consolidation right here. We tested it once, twice, 3 times, then took a big dip right there. When you're not very accepting, you're not saying, come one, come all, come use our coin. Set up for trouble. Now this move up, did retrace and hold a 618. Then we're right here. Same price pattern, same everything. Nothing changes just because it's crypto. Now we moved down and up for another 618 right there. So we're nested. You know, we've gone push that extreme, 618, 618. We retrace again. Possible to hold a 618. 618. That starts to be a wedge. Break down, break out. Unclear. The risk, though, is to come back below 1,000. And this be one big correction. As I've talked about several days now. First move down. Second move down that's present on all the Mag 7s is present right there on Ethereum. It's a risk. A definite risk. So, if you've not seen that before, that's the caution I have thrown out on Ethereum. Now, the coin that's been winning with all these cryptos, Solana, super easy to create cryptos now, just barely poking higher. Right there. But then done a revisit of the roadmap line on the weekly, 620 retrace, and that sets up for a bigger potential downside. All right, this is done what could be considered a 5 up, and that's complete. And now a retrace could take it as far as down as 50. See a large flush out before we might go higher. Now this could be, it also could be, working on a wave 4, and it's possible that this is just a wave 4 consolidation. We only dip down to 80s and then we actually extend it. It could be that, never know exactly for sure which thing's happening, but first move down, second move down, we put it down here in the 50s, which is consistent with that being a 5 up, or wave 1, wave 2, 3 down, and then wave 3 could be pretty large for Solana. How large? We could be putting it into the 1 to 3,000 area. Right up in here. That could be a big winner if we get that kind of pullback down in the 50, 60 range on Solana. Could be one of those epic climbs that we saw like on Ethereum. Back here. Saw the same kind of 5-wave structure here. Not making new high, but it did create a 5-wave structure and a retrace. Went a little deep, and then we went on this epic rise from the lows here right up to the high. Like a 3,700% increase. That same kind of potential does exist right here. on Solana. Yeah, see, that's 3,000% basically. Now, the other question though is like, where does the money come from? So right here we've got $76 billion tied up in there. We've got $300 billion tied up here. $2 trillion tied up here. These two could leapfrog. I mean, could swap places. I know a lot of people like, what about XRP? You know, what about a lot of them? Like, there's 17 million cryptos. We could play what about all day. I'm kind of highlighting the ones that got my attention right now for various reasons. And this one keeps climbing. Oh, that's cool. This one, I don't know what just happened with my drawing tool. This one keeps climbing. Bitcoin Cash. It's a fork off of Bitcoin when they changed the code years ago. Bitcoin Cash. Let's just load up Coinbases. Cool, everything's gonna be slow now. Oh, I love it. I have to close the browser. So look at this one. It's a giant kind of uptrend of lows, downtrend of highs. Not really following Bitcoin's trajectory much at all. Now, if this one were to break out here, potential for this to have a nice upside. You can see this go from the $400 area up into the $2,000 area. It's been there before. So that's another interesting opportunity right there. This one's been outperforming. I say, why do I indicate it's been outperforming? When you look at this chart right here, it doesn't really look like all the other crypto charts. When we pop over and start going down through total 2, and then total 3, and total 4, or others, you know, excluding the top 10. These charts all have a certain look to them, and Bitcoin Cash looks a little different than all those. See, we're not up here at the all-time high. We're somewhat down here consolidating. Now, another interesting one. Love it or hate it, good, bad, or ugly. This one has a potential measured bounce set up here in the chart with a 3-wave. First move down, second move down, already playing out in place. So use the potential to go from $9 up to like $30. Get below $8, probably going lower low. I'm not saying it's going to work. It just has that price pattern. First move down, 3-wave retrace. Second move down. It's kind of playing out the last little squiggles here, leaving an opportunity. And if this thing got really bullish, we might see it 4x almost. That's one of those opportunities I've seen. Now, I've talked about Bitcoin treasuries. There's this, we jokingly call it the infinite money hack in the background, where companies like MicroStrategy buy Bitcoin, create bonds, sell bonds to the market, they put the Bitcoin on their balance sheet to increase the value of the company, sell more bonds for the bigger value of the company. People in, big funds like family offices, retirement plans, like cities, counties, things like that. Their pension system needs a place to park money at a stable return. MicroStrategy's guaranteeing a higher rate of return with their bonds, so it attracts money from those stable, pension funds, and then they take that money and buy more Bitcoin, put it on the balance sheet, rinse and repeat. And it's, we call it the infinite money hack because essentially they can keep doing that as long as Bitcoin moves positively. Now, they're doing it on a big picture, they're not narrow-minded and just looking at the current volatility in Bitcoin. They're Michael Saylor looking at the long-term 10, 20-year picture. He's projecting out to 2040 right now, 15 years away, where he thinks Bitcoin's going to be. And he's thinking 21% has been the average gain per year on Bitcoin. Excuse me. And his goal by the end of this year is to have 1 million Bitcoins in their treasury. And right now they're coming up on 600,000. So that's still 50% more Bitcoins. It's kind of interesting. Now, there's other companies that are starting to do this too. It's like Mara Holdings trying to do the Bitcoin treasury thing, but they're also a miner. CEP trying to do the Bitcoin treasury thing. Lots of these other companies trying to do the Bitcoin treasury thing. Some of them just hold Bitcoin, like Tesla bought Bitcoin back last cycle and they've just been sitting on it. You can kind of see their cost basis and stuff on bitcointreasuries.net. And they used to have a bunch of data that you could just see for free. Now they're starting to be like, well, we want people to make an account. And so I'm not going to log in. But you can see how much Bitcoin is tied up in these treasuries right here. Now, SBET, they're the first one to take that and apply it to Ethereum and try to be an Ethereum treasury. Now, the big risk here, I talk about this kind of stuff in my Crypto Power Plays updates for the week, but the big risk here, to me, I've already just discussed how Ethereum is kind of falling out of favor. But this little bar right here on Bitcoin represents a fixed supply, and it's almost full. There's no gray bar here. So when you go, put your finger over it, the pointer, it says 94.67% percentage. That means that the amount of Bitcoin that's on the market available for us to obtain, potentially, 94.67% of all the Bitcoin there's ever going to be is out there in the market already. Ethereum, hold your hand here, you just see the circulating supply. If we click on it, cool, thanks. We look at this max supply number right here. That symbol means infinite. What other thing has infinite supply that we are very keenly aware of? Fiat currency, US dollars. Infinite supply. What happens with US dollars? They make more of them. The value of them goes down. Supply and demand. Simple. So what happens here? You're trying to be a treasury. And more of them come on the market. The value of your treasury goes down. Ethereum hasn't really moved up in 4 years. Like, they just gone sideways. That's not the same 21% per year appreciation rate. So these guys betting on Ethereum being a good bet on Treasury. Sounds like a sketchy bet to me. Right there. This was super hyped. Now it's back down 90%. Probably going to come back down. Has a reverse split. It's a dumpster fire, basically. Basically a dumpster fire. So this is kind of the, to me, it's the interesting new development in the crypto space is these altcoins and stuff. We're probably past peak altcoin. And we're seeing that right here. Bitcoin dominance has not let up right here. And we're seeing altcoins kind of drift away. And as the market gets diluted, and this, make no beans about it, 17 million cryptos is just crazy dilution. Where do people focus? Focus on the top. Ignore the rest. I mean, you could say, oh, this crypto's interesting, that crypto's interesting, this project's interesting, that project's interesting. And I get offers all the time to, hey, check out my new project. Most stuff isn't going to make it. Like, unless it solves some giant problem the world has, most things aren't going to make it in the crypto space. One that I was big on for a long time that seemed like a complete farce to me was helium. This one right here. A lot of people got really hyped up. I saw tons of YouTubers, everything hyped up on helium because you could buy helium miners and basically just like Wi-Fi routers, hook it up, and they would pay you helium for expanding the network. And, they kept it pretty hot for a while. And we went through crypto winter and it stayed actually pretty hot. The mining was still pretty profitable. Basically, you had to obtain a unit, hook it up, and just run it. And you got paid in helium. The problem here, though, building out a giant network, how do you use it? Like, how are they going to make money? How do you actually use helium? How do you put something on the helium network? I have some Internet of Things devices. I was like, hey, cool. If it's actually cheaper than all these, available technologies, it sounds cool. Like, I'd love to, put it on there. And it's super cheap to operate. Great. I tried to put a device on there that wasn't, one of their network devices. Couldn't do it. Couldn't figure it out. Wasn't easy. It's not easy and simple. You know what happens? Nobody uses it. You know what happens when nobody uses your network? Goes down. Nobody uses your coin, goes down. So this one has that first move down, retrace, second move down potential right here. 99.9999% of all the cryptos out there, nobody's going to use that coin for anything. And one that showed great promise that seems to be going in a severe downtrend now, ICP, Internet Computer. We had lots of AI tokens that got some hype earlier in the year and then started getting crushed. Fetch was hyped up, and then this is starting to be a 5-way down. May see that retrace and then continue down. Sorry, I don't have a mute button on. I do apologize. something got me wheezing a little bit. So in Crypto Power Plays, I do review all of these tickers, and I do kind of change them out. Now, everybody kind of been really focused on my favorite miner, Mara, and they're kind of trying to become a Bitcoin treasury. Kind of trying. I don't know how serious they are at it really. But the big thing to me, notwithstanding anything else, this has a potential move up, a retrace, and a potential to move up again. Now going even smaller time frame, move up, retrace, hit the 50, and a potential to move up again. It's similar to what we looked at on other charts here, like Ethereum. Now it's got lower highs, higher lows. Could it break down? Sure. Could it break up? Sure. That move up, just the one I'm looking for right now. Potentially right near 100. Got lots of resistance we're going to have to break through to get there. But that might be it. That might be the last move. And then it goes into that correction, takes it down below $1. I don't think most of the miners are going to survive the next crypto winter, or next halving cycle, or next whatever you want to call it. Just don't see that viability. Now, another one that people were super excited about on the back of the stablecoin stuff, people are talking about how coin was absolute ripping. Well, absolute ripping is all relative. You know, we were up $40, but when you look at it, it's not been doing a lot here. You know, $40 is not, and I mean, we've done $40 days lots of times in Coinbase. Like, that's kind of part of what it does. So we've got this move down, and we've been hanging out right here at this retrace, right at the roadmap line. If we break out, got that resistance right there. If we can get through it, right up here is probably where we're heading. Right in this zone. I don't know what's going on with that. And 398, 445, right there. My friend Likely was calling Mr. Likely, first name scam. So if we were to pop up in there, consolidate and extend, could see 600. And then if we look at the bigger picture on Coinbase, so remember when I said about that IPO stuff on Circle, you see how Coinbase went from their crazy IPO up here in the 300s down to 30, 90% correction. We'll look at this potential as a correction. It kind of looks like 5 down, so be careful if we don't break out. This lowest point is kind of where we need to work off of, but we could see an extension up to this 633 area. And that corresponds with that 618 right there. So there's potential for that area. Potential. I don't know. Maybe, maybe not. We'll see if it actually does that. I am long Coinbase via this ticker right here, CONL. You know, Coinbase is further along on the climb here. This one got wrecked pretty good, trying to maintain the leverage. This one may make it to, from this 33 area up here, right around 90 to 100, maybe 110, 120 if we get really lucky on this run, but that's what we're looking at. A lot of people see Coinbase as a potential beneficiary of the stablecoin bill because of a partnership with Shopify. Coinbase and Shopify did a deal where Shopify is going to roll out stablecoin transactions ability to their almost 6 million merchants. So that's where the state of crypto is kind of going right now. It's less off of that kind of thing, and more on attacking Visa and MasterCard and their dominance in the space. And I do keep track of Visa and MasterCard in here, and you can see Visa with this stablecoin bill going through, came up right to the target and then pulled back pretty deeply. Seeing MasterCard, same sort of thing. Capital One, not really, even though they run Discover Network now. Discover Card, DFS, was bought out by Capital One. So now they run the Discover Network, and we're not seeing that kind of same pattern here. We weren't up here, and we didn't pull back bigly right there. And Capital One has merged with Discover and launched the VentureX rewards in the news right there. I don't actually track Capital One in here because it seems to be kind of independent. Visa and MasterCard both reportedly trying to be in the crypto space, but Capital One and Discover weren't really rolling out big projects that same way. Now, Visa and MasterCard have a big moat built around credit card processing. They've got Visa and MasterCard are the networks. You've got middle tier people that do processing. When you go swipe your machine, you see all the different machines that you swipe. Some company is actually taking those transactions, breaking them down into their, which bank belongs to that transaction, and then throwing them out there. And it's not just the point of sale machine. It's, there's actually credit card processors. One that has a big local presence is Elevon, and I don't think they have a public ticker, at least not that I know of. Elevon. L. Yeah. It's Nova back. It used to be called Nova, and I don't think that's, they're not public. It's a private company. And they provide credit card transaction processing all over the world, or all over the U.S. I think it's all over North America. So pretty sure they were expanding into Mexico, and their company name was Nova. And if you speak Spanish, Nova means no, go. So they changed it and reversed. So now it's Elevon, which is Nova with an L-E-L. So it's Nova backwards with an L stuck on it. Elevon. They renamed it to that. Anyway, I think it probably helped with the Spanish speakers in the United States too. So they've got their moat built around credit card processing. And circling back to where I was talking about a few minutes ago, is that, those credit card fees are built into everything we buy. And part of everybody hyping the stablecoin bill was that we can cut out those high credit card processing fees that get integrated into the prices of everything and paid to all these big players. But I don't see the hype. I don't there's companies behind these stable coins right here. There's companies behind Tether. There's company behind Circle, USDC. There's companies behind every big stablecoin like that, and they're going to want that piece of the, credit card started out as just, we're helping consumers, but this just starting out as helping consumers. And eventually, those processing fees probably going to be just as, just the same. Even, Coinbase taking a cut. Everybody's got to take a cut. Everybody's got to make money to be able to make this work. So I think the fees, the argument that it'll be lower fees for consumers is misguided. I mean, just think about it. When do they, talk about raising your taxes? And we're just going to raise them, we'll cut them back in a couple of years. Yeah, right. Taxes only go up. Fees only go up. I think it's looked at as the Visa MasterCard got a little too greedy, but maybe they did, maybe they didn't. I think they did get complacent, but they have a very large moat built around it. I mean, if you have a Visa card, it's super easy to use anywhere for anything you need to use it for. So I digress. That's kind of the state of the crypto market right now. We'll do another one of these updates like this on the 4th of July. Coming up in a couple weeks. When the market's closed, we tend to do these crypto deep dives. And thanks for coming, everybody. We'll see you again soon. Bye for now.